Welcome, savvy viewers, to our comprehensive guide on navigating the world of legal tax savings. Today, we're embarking on a journey to uncover strategies that can empower you to minimize your tax liability while staying well within the bounds of the law. But before we dive into these valuable insights, let's emphasize the importance of consulting with your trusted accountant or tax professional. Their expertise and personalized guidance will prove to be invaluable as we explore these strategies tailored to your unique financial circumstances. Now, here's a simple request. If this video equips you with the knowledge to save money on your taxes, consider putting those extra funds to good use. Whether it's treating yourself, extending a helping hand to someone in need, or making wise investments, the choice is yours. After all, your money should work for you, not just sit in government coffers. In today's discussion, our focus will be on individuals earning under $400,000 per year. While there are more advanced tax strategies available to high earners, we'll concentrate on techniques that apply to the vast majority of our audience. It's essential to set realistic expectations right from the start. There's no magic wand here. No secret loophole to reduce your tax bill to zero. Such privileges are typically reserved for billionaires with intricate offshore structures and armies of tax experts. Our mission is quite different. We're committed to exploring practical, legal methods that anyone can implement. So, if you came here seeking illegal tax evasion strategies, I must gently guide you elsewhere. This video is all about ethical, legal approaches to optimizing your tax situation while upholding your financial integrity. Are you ready to embark on this enlightening journey toward legitimate tax savings? Let's embark together. Now that we've laid the foundation with those essential tax-saving strategies, let's dive deeper into your financial toolkit. These are the tactics that can make a significant impact on your tax liability while aligning with your financial goals. So, let's get started. Let's begin with an easy win: commuter benefits. If your workplace offers this perk, don't let it slip through your fingers. In 2023, you can set aside up to $300 per month tax-free for commuting expenses. That's essentially a $300 tax deduction every month, which amounts to a generous $3,600 annually. This benefit extends to various commuting expenses, including mass transit, think trains, subways, and buses, ride-sharing services like Uber or Lyft, parking meters, garages, lots, and more. Next up, we have retirement plans. Take full advantage of retirement plans offered by your workplace, such as the 401(k) or 403(b). A 401(k) is typically offered by for-profit companies, while a 403(b) is more common for government and non-profit employees. Here's the beauty of it. When you contribute to your 401(k) or 403(b), you not only reduce your current tax burden but also build a solid foundation for your retirement. These contributions are an investment in your future. Moving on to health-related benefits, let's talk about health savings accounts, HSAs. If you have a high-deductible health plan, the HSA is your secret weapon. Contributions to your HSA lower your taxable income, effectively serving as a tax deduction. Here's the magic. When you use the money for qualified medical expenses, it's entirely tax-free. In essence, you're covering your health-related costs with pre-tax dollars, a financial win-win. Plus, you have the option to invest your HSA funds, and any earnings and interest remain tax-free. Last but not least, we have flexible spending accounts, FSAs. FSAs are fantastic for covering certain healthcare expenses with pre-tax money. However, a word of caution: FSAs typically operate on a use-it-or-lose-it basis. If you have leftover funds at the end of the year, they might not roll over unless your company offers a rollover option. Intrigued? These financial tools can make a substantial difference in your annual tax bill, leaving more money in your pocket. But hold on, we're not done yet. In the next part, we'll uncover even more tax-saving gems. So stay tuned and keep those financial engines running smoothly. Welcome back to the third installment of our tax-saving journey. In this section, we're diving into strategic moves that can optimize your financial health, reduce your tax burden, and ensure you're not leaving any money on the table. Let's kick things off with Dependent Care Flexible Spending Accounts, FSAs. These nifty accounts allow you to cover child care expenses with pre-tax money, a win-win for both you and your wallet. Whether it's child care for your children or adult dependents, you can use these funds for daycare, nurseries, preschools, nannies, au pairs, babysitters, day camps, after-school programs, adult daycare facilities, and more. Now, let's dive into the world of investments. Number 6 on our list is capital losses. When it comes to cryptocurrencies, ensure that you report any losses. Yes, losses are your friends for tax purposes. They translate into valuable tax deductions. For stocks, you'll receive a tax form called the 1099-B, where your stock losses are accounted for. Stock losses are typically hard to miss, but cryptocurrencies, on the other hand, often require you to proactively report losses. Don't leave money on the table by neglecting to report them. Moving on, we have long-term capital gains, LTCG. Holding on to a stock or cryptocurrency for more than a year before selling it classifies the gain as long-term. Here's the sweet part. Long-term capital gains receive favorable tax treatment. The tax rate for LTCG is generally about half of your regular tax rates. If your income falls below a certain threshold, you might even qualify for a 0% tax rate, making your profits 100% tax-free at the federal level. Finally, we arrive at a crucial step, reviewing your 1099-B tax form. This document is your year-end tax statement for all your stock market activities, provided by your brokerage account, whether it's Robinhood, Ameritrade, or another platform. You'll typically receive it between late January and mid-February, but you can also download it from your account. When you receive your 1099-B, give it a thorough once-over to ensure there are no glaring mistakes. One common error to watch out for is missing information, particularly the purchase price of a stock or cryptocurrency. If this crucial information is omitted, it may appear as if you acquired the asset for $0, resulting in incorrect tax calculations and potentially costing you more in taxes than necessary. Stay vigilant and review your 1099-B to ensure accuracy. Remember, every detail matters in your financial journey. Let's begin with margin interest. Don't overlook the opportunity to deduct your investment interest expense. This deduction is typically listed on your 1099-B tax form, although it might not appear on the cover page. Many people forget to report this deduction, so ensure it's included when you file your taxes. Here's an intriguing one: gambling losses. While it might seem random, it's surprisingly useful, especially if you've had a bit of luck at the casino or other betting activities. When you hit it big on a slot machine or similar games, you'll receive a tax form called a W-2G. This applies not only to million-dollar jackpots, but also to more modest winnings, typically in the thousands. The casino reports your winnings to the IRS, so it's crucial to report them on your tax return. However, the silver lining is that you can offset your gambling winnings with your gambling losses. Any money you lost while gambling, whether at table games, slots, sports betting, or horse racing, can be used to reduce your taxable winnings. It's a valuable way to ensure you're not overpaying on your taxes. Now, let's talk about the traditional individual retirement account, IRA. While we've touched on 401(k) and 403(b) plans offered by your workplace, The traditional IRA is a retirement plan you can set up independently. Depending on your circumstances, you may qualify for a tax deduction when contributing to your traditional IRA. It's an option to keep in mind as you plan for your retirement. Last but not least, we have the 529 plan, a fantastic tool for saving for education expenses. Whether you're saving for your child's education, someone else's, or even your own, the 529 plan offers valuable benefits. While you won't receive a tax deduction from the IRS for contributing to a 529 plan, many states offer tax deductions on their income taxes for these contributions. Be sure to check your state's tax laws to see if you're eligible for this deduction. Even in states without a deduction, you can still benefit from tax-free growth within the 529 plan. If you typically owe money to the IRS when you file your tax return, you might unknowingly be incurring underpayment penalties. These penalties are listed on your tax return but often go unnoticed because they automatically add to your balance due. It's a bit sneaky, isn't it? To avoid this, you need to adjust the amount of taxes withheld from your paycheck. You can make this adjustment by updating your W-4 form through your payroll department or payroll settings. If you're unsure how to do this, check out my video on the topic for step-by-step guidance. In the age of Airbnb and similar platforms, many individuals rent out their homes for short periods. Here's an important tax tip: utilize the minimal rental use rule. If you've rented out your home for 14 days or less during the year, any income you earn from these short-term rentals is 100% tax-free. It's a valuable opportunity to keep that money in your pocket. Ensure that you report this income properly to benefit from this rule and consult with your tax professionals if needed. I hope you found these tax-saving strategies helpful in your journey towards financial efficiency. Remember, every dollar saved in taxes is a dollar you can use to treat yourself or help someone else. If this video has been beneficial to you, please consider subscribing to our channel. Your support is greatly appreciated, and I wish you a fantastic day ahead.